Hello, everybody, and welcome back to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today, we are going to be analyzing Micron Technology stock, and I'll share with you the price at which I will buy this stock again. As always, this is not individual investing advice. This is just how I analyze stocks. This one came in by request down in the comment section of one of my other videos. If you have a request you'd like me to take a look at on the channel, just put it down in the comments. I will put the ticker on the whiteboard behind me, and eventually I'll make a video. If it's a stock that's in the S&P 500, like Micron is, I post those on YouTube for free, and the rest I post over on Patreon. So I thought I had already made a Micron video, and when I went back and looked, I actually had but I only posted it on Patreon like a couple months ago. And I also wrote an article on Seeking Alpha about Micron. I've been covering Micron since 2018. Oh my gosh. And so it's become one of my favorite stocks, actually, because I'm probably one of the few people that's done really well with it consistently over this whole time, buying and selling the cycles. So this is called the Cyclical Investors Club, and honestly, a lot of the investing I do now doesn't really have too much to do with cycles, with cyclical stocks. But let's actually go back and I'll talk about this because it's such a great example. But Micron is like one of the quintessential cyclicals that we have nowadays. Now, if you ever look at any stock that's in the semiconductor industry, there are a couple that aren't too cyclical, but you should probably just assume, if there's not a lot of history or anything like that to look at, that if you see semiconductor or maybe semiconductor equipment, honestly, a lot of like electrical equipment companies too, are usually pretty cyclical. One of the reasons for that is they have a lot of overhead costs that are fixed, and the demand for their products or chips, in this case memory chips, fluctuates, but a lot of their costs stay the same. So when that demand falls off, then earnings fall a lot, but when the demand comes back, they really jump a lot if it's a good business. So what we want to see now, how you determine whether a business is cyclical or not is this dark green area or this orange line is their historical earnings. Whenever I see that it goes up and down more than like 50% during up and down cycles, this is like negative 250, negative 700, minus almost 100. Those are all over 50% declines. That's a cyclical business. Well, that's a business in which earnings are falling. You also want the earnings to recover, preferably in a timely manner. That's the actual cycle. They can go down more than 50%, but they need to come back up too. So if you look at all these historical recoveries were higher. If you look at the peaks, higher. This one had tax cuts in it too, so that's a little bit higher than normal. Maybe if you kind of average these two together, you'd get a better read on it. So it's a little unusually high. But for the most part, higher highs all the way along, and the market's expecting a higher high this year. Also, for the most part, higher lows. That doesn't have to be the case, but in a secular growth industry like the semiconductors are, that will be the case. Now, in more recent times, this down cycle, Micron actually, the earnings got completely creamed. They just now turned positive, it looks like in the middle of the year. So the lows had been higher and higher and higher, but coming off the COVID bust, basically the COVID stimulus bust and all that, you really get to see the cyclicality pick up or display itself or whatever you want to call it. Now, if we take off the earnings and we just look at the stock price, it gives a little bit clearer picture. So what I want to do is, if I have a business that has earnings that are that cyclical, PE ratios are not very useful. Earnings metrics are not very useful, other than to do what I just did, which is classify the stock as a high quality, deep cyclical, and then you can look at what time periods, how long these cycles usually go, and you want short like these are like ideal. Sometimes they can be too long. If you take like a shipping industry or something like that, sometimes their cycles are really long. So it's hard to figure out maybe where the bottoms are, how long it's going to take to recover, how high. They're just harder to figure out. You can get a much better read on a business like Micron. So my history with this is I warned people about it kind of somewhere in 2018, or I told people where I was going to buy it. Everybody told me I was crazy. David Tepper came on CNBC the day my article came out and said if he could only own one stock, it would own Micron. And then the stock jumped up after that. But it was only a couple months later that it fell down to the price that I said I was going to buy it at, which was down here and somewhere, I forget exactly back then. But I was able to pick it up near this low. I sold it right before COVID started. I think I sold it the last day in 2019 for a good gain. And so I made money on this little part right here. Missed this down cycle completely. Also missed this up cycle because I was pretty worried about cyclical business. I didn't really buy hardly any except for oil refiners and maybe one industrial cyclical, but I didn't buy too many in the COVID thing because I didn't know how bad that was going to be. So I actually missed this big up cycle, but I was able to buy it again down here somewhere. I think it was in the fall. Yeah, it was like in the September, right in here, 2022. Got a double out of that. Took profits somewhere around $100, I think, somewhere around there, right in here. I think it was right before this giant jump because everybody told me I was dumb. I sold like in between $90 and $100 in March of this year. And so I'm waiting to get back in. Okay, so I've really made about 300% on this stock if you count the reinvested gains from this investment again. So I've done really well. I missed out on, actually the stock's about down to where I sold it from. So it had this big spike up and now it's on its way back down. That's the backstory. So I feel like I have a pretty good read on this. Now, when I invest in deep cyclicals, I ignore, once I get them figured out here, what I do is I ignore the earnings and I try to look at what these historical drawdowns have been like. So I have this one. We actually can go back here. I have some that go back even farther, but we can see what was this drawdown like, what was this drawdown, what was this down cycle, this one, and now we're into a new one, potentially. Things are weird right now because of the AI stuff that's going on. But I like to base it on what it's done in the past to use as a guide, because a lot of people will use earnings or stories as a guide. And I guarantee you most people since 2018, when I first started writing about the stock, since mid 2018, most people have not made as much money off of it percentage wise as I've been able to do. So I feel pretty confident about that. Doesn't mean I'm always right every single time. But so my strategy is to buy this when it's near its lows and to try to get, I pretty much know when I'm going to sell it. I usually try to sell when it starts making new highs. So when I sold up here, it was starting to make new highs. The previous high was somewhere in here, right? Let's call it 95. And then when it got to 95, again, I made a double in a year or so. And so I sold it. That's what I wanted to get. What I usually aim for is at least 100% return within a 5-year time period. So I'm willing to wait 5 years for a double, but fortunately Micron has been really nice, and a lot of cyclicals have been nice in the semiconductor industry, and they've returned that usually within 2 years. So those type of returns are really nice to get. So if we go back and look at we'll see if my spreadsheet will load at some point. So what I want to do is show the historical drawdowns. Now where it gets tricky is, I would say up until about that 2018 period, you could actually kind of see it during their 2016 drawdown too. But we are in a secular growth period, I think, for chips in general, even though they're just coming out of a nasty down cycle now from the post-COVID. The overall trend is kind of a secular growth. You know, the higher highs and the lower lows are kind of where we've been until just recently, with Micron in particular. So that makes it you need to keep that in mind, because the base is always going to be kind of rising, and that can cause the depth of the typical decline to be a little bit higher. So with some companies, I only have like one buy price that I'll come in at. I kind of know what it's at there's enough similar companies that I'll be able to find if it doesn't hit, and I let it be at that. With others, usually almost always semiconductors, actually. There might be a couple industrials too. Well, Albemarle is one that I have two levels of buy prices for too. So occasionally I'll have two buy prices. So with Micron, I actually have four small layered ones planned, just because it's so tricky and it can fall so deeply sometimes. So look at these drawdowns. The dot-com bust, it fell 92%. 2008, it fell 90%. I don't have, so the 2020 was only 40. That was really shallow. What do we have? I think this one was 65. I think I bought it 65%. It was either 50 or 65. I'm going to look at it real quick. Let's shorten this. So we kind of have a little bit more recent. These earnings are just crazy. Okay, now we can see it. So here we go. This is the one I actually bought. Okay, that was 50. Okay, so this is why. AMD I bought when it was 65% off its high during this exact same down cycle. Micron got down to 50%, and that's when I bought it. So, but this wasn't a recession. It was basically a bust from the COVID stuff. If we had a recession at the same time, it's going deeper than 50% off its highs. All right. Also, I don't know how peaky these peaks really were compared to a lot of these other companies that went totally crazy in 2021. These peaks are pretty much in line with this 2018 peak, right? Now, this more recent one that just happened, I mean, their earnings haven't even really recovered yet. If you look, after I complained about them, I'm going to put them back on for just a second. So this stock price is already up here making a new, spiky top, and earnings are just barely starting to recover. So we don't know if analysts are very optimistic. This seems optimistic to me, but I will say that they are almost always wrong. That is when it comes to this stock. This is very optimistic. So I would ignore that and just say, we don't know exactly what this total recovery is going to look like for earnings here. But my main point is it's just getting started. And so it could definitely sputter if the economy sputters, right? And we already seen a lot of cars and stuff. Car sales are going down. There's a lot of cyclical businesses, the consumer businesses that are kind of maybe going in a down cycle. So this might not be over yet, and they already made this new super top, which is kind of a little crazy. But I'm giving the market a little bit of credit here, and I'm keeping that initial buy price 50% off this peak, okay? But I know that it could fall 85%. It really could. If we have a recession and their particular industry is affected a little bit, and maybe they've been making some investments that are fixed, that have fixed costs and things, because they get optimistic on AI or whatever, definitely happen. Look, 85% decline is not off the table, so people need to really keep that in mind. So my expected recession drawdown, I have at 75%. So we do have a lot more computers and need more memory and stuff. If that looks crazy to people, go back and look at the previous drawdowns. And then they had a 50% drawdown when there wasn't even a recession. Okay, so that's not a crazy expectation. But in the market we're in, there's no guarantee that it's going to get down there. So I'm willing to start buying when the stock is 50% off its highs. The high price that it made a while back was $157 a share. And so that puts my initial buy price for a 0.5% portfolio weighted position at $78.77 a share. That's about 22% lower than it is right now. So the next levels of buy price, I have 4 of them here, and I put them in my notes. I don't usually do this, but Micron's a special case. Next buy price, $68.92, then $49.24, then $39.39. Now the odds that it's going to get all the way down to under $40 are low, but they're not low if we have a recession and it hasn't already had time to kind of come back from the struggles that are already kind of in. So I'm not predicting that it's going to. If I knew exactly where it was going to go, I would just put all my money in at the bottom. But I did get the exact bottom pretty much back in September of 2022, and I got pretty close in 2018. So sometimes, but I was prepared to buy more in 2018 too. So it's not an all-in thing. And the thing is, if you go all in too early on these stocks, it is really, it's brutal. It's brutal because they fall so hard and so fast that it just scares the crap out of people. And that's when it kicks in that second level. I mean, that's when people really just can't take enough. And we haven't had that happen since 2016 with this stock. I don't think we've really got it. So here we go. And it's not back that far. So it started in basically the beginning of 2015. We had the industrial recession, if you remember back then, quite a bit of economic weakness. Just from those two measuring points, it was down almost 75%. So, and that happened in, let's see, a year and a half. And it went pretty much straight down. So you can imagine everybody that bought that stock in the previous 4 years is underwater. And the fundamentals they look horrible usually. So look at their fundamentals. They're basically making no money. It looks like they're going to go bankrupt. When all those things come together, and then all the analysts are all bearish, and it's just the end of the world. It's really hard for people to hang on to these stocks, and so I really try to limit drawdowns to 50% or less. And it which sounds which is a lot. But when you know what you're getting into when you buy, the main thing is you know what you're getting into when you buy a deep cyclical like this. When I talked about ALB when we bought it this time last year, which is down, I don't know how far down it is still, but I said the same thing to people because we have this super cycle thing going on here. I forget exactly when it was. I think it was in maybe November, somewhere probably right around this little bottom that it had, and then it just kept going down. Pretty much, bumped and then went down to 35%. So now it's not down quite so badly. But when I bought it, I told everybody the same thing I'll tell about Micron if I buy it at $78. It can go lower, but imagine if you were the person that bought all the way back here. Okay. We're 4 years later, over 3 years later, and you've lost 60% of your money. And pretty much anybody that bought during that time is down that much if they still own it. But honestly, most people don't still own it. They sold it. That's why the stock is down so much. The people just cannot take that kind of pain. Now me, I bought this one. I was before the pandemic slightly during this downturn, and then sold it for a double up here. And then I looked kind of dumb, but because the stock went to double again probably. But I didn't know when it was going to peak. But I know I made my double and made 100% in a couple years. And I would wait for the next down cycle. And so you just wait, and now we're in it. And it could still go lower. I told you it would go down to 50 or 60, potentially 50 or 60. It got down to 72. Now, if it got down to in the 50s, I would consider buying some more. But this is going to be a nasty downturn. I mean, we'll see what happens. But you just have to understand that ahead of time. So I don't really worry about it or check it because I know that can happen. It's happened before. I mean, you only have to look back here. And let's just look. So down 65% right there. And that's probably not even the perfect top and bottom. So we know it's happened before. It'll happen again. Don't know how bad it's going to be. But the thing is, when you get them right, you do really well. And you can sometimes do really well when not everything else is returning 100% in 2, 3, 4 years. I mean, those are really good. Even in 5 years, 100% return is 15% a year. So, but you have to have guts and you have to be patient. Okay, if you found this video useful, hit the subscribe button, hit the like button. If you have any questions, put them in the comments. I'll answer them. Any requests, put them down there. I have a $25 tier on Patreon now where I have a pick every single week. I just pick the best thing I can find in the market and share it. It's been doing really well. People really like it. I just started that up in October. And then I have the full Cyclical Investors Club service over on Seeking Alpha. Those links will all be down in the description. All right. See everybody later.